September 11th, 2001, a day of shock, grief, and unimaginable loss. Nearly 3,000 lives gone. The Twin Towers turned to rubble. But in the months that followed, another battle unfolded. Not against terrorists, but in the courts. Not over ideology, but over money. Billions of dollars. And at the center of this fight was a single word. A word so ordinary you might use it every day. But in the world of insurance, it carried the weight of billions. That word, occurrence. In July 2001, just 6 weeks before the attacks, real estate developer Larry Silverstein took control of the World Trade Center. He signed a 99-year lease worth $3.2 billion. At the time, it was the biggest property deal in New York history. The lease required massive insurance, and because terrorists had already struck the towers once before, in 1993, terrorism coverage wasn't optional, it was mandatory. But here's where the deal wasn't finished. The insurers hadn't finalized the contracts. Instead, they handed Silverstein binders, temporary placeholders, like a receipt that says, "You're covered, the detailed paperwork will follow." And inside those unfinished contracts, one key word hadn't been clearly defined. What exactly counted as an occurrence? Nobody cared in July. By September, that one word became everything. So what is an occurrence in insurance? Let's break it down simply. Think of it like this. You have a homeowner's policy. If a storm knocks down your fence and shatters your windows at the same time, is that one claim, one occurrence, or two? Insurance companies need to define it because it controls how much they pay. If it's one occurrence, there's one payout limit. If it's two, the payout could double. Now apply that to September 11th. 2 planes hit 2 towers, but was that one coordinated act of terrorism or 2 separate disasters? Here's why it mattered. If it was one occurrence, insurers owed $3.5 billion. If it was 2 occurrences, the payout doubled to $7 billion. That's not just accounting, that's survival for Silverstein and the insurers. A single word would decide billions. By the end of September 2001, Silverstein's legal team had filed claims with more than 20 different insurers and reinsurers. And right from the start, the tone was hostile. Insurers suspected Silverstein would try to maximize his payout, and they weren't wrong. His claim argued that the destruction of the North Tower and the South Tower were 2 separate occurrences. 2 strikes, 2 collapses, 2 catastrophic losses. By his calculation, he was owed nearly $7 billion. The insurers pushed back immediately. They called it opportunistic, even exploitative. They argued this was one coordinated act of terrorism, a single attack executed by one group with one purpose on one morning. That, they said, made it one occurrence, not 2. And if it was 1, their payout was capped at $3.5 billion. Behind the scenes, there was more at stake than just the towers. Insurers feared a dangerous precedent. If courts sided with Silverstein, it would open the door to billions in extra liability whenever large-scale disasters involved multiple impacts or stages. For reinsurers in Europe, already nervous after paying out billions for asbestos claims and natural disasters in the 1990s, the thought of a double 9/11 payout was terrifying. Some reinsurers admitted privately that a ruling for Silverstein might have bankrupted them. The legal battles began in earnest in late 2002 and stretched for years. Silverstein's lawyers emphasized simplicity. 2 towers, 2 planes, 2 losses. They used timelines, animations, and witness testimony to hammer home the separation between the North Tower's destruction and the South Tower's destruction. The insurers, led by Swiss Re, took a different approach. They focused on the big picture. They brought in counterterrorism experts who testified that the hijackings were part of a single coordinated plan. They argued that splitting it into 2 occurrences was artificial, like trying to separate the left hand and the right hand of the same attacker. One of the most remarkable elements of the trial was the reliance on experts in linguistics. Judges and juries were asked to consider not just what occurred, but how the word occurrence should be interpreted in the context of insurance law. Imagine sitting in a jury box while lawyers argue about whether 2 collapses count as one event or two, and whether the word in question is clear enough to decide billions of dollars. That's exactly what happened. The results were mixed, and that's what makes this case fascinating. In December 2004, a federal jury ruled that insurers who had bound their coverage using the will prop form were only liable once. That capped their payout at $3.55 billion. For them, it was a massive relief. But for the other insurers, those who had relied on vague binders and incomplete contracts, the outcome was different. In April 2004, a separate jury ruled in Silverstein's favor, declaring that for those insurers, the destruction of each tower counted as a separate occurrence. That meant double payouts. Billions more flowed into the pot. When the dust settled, the total was about $4.6 billion. Not the $7 billion Silverstein hoped for, but more than insurers wanted to pay. Each side claimed partial victory, but both sides walked away scarred. The court cases dragged on for nearly a decade, with appeals and side battles over specific reinsurers' responsibilities. The financial impact of this case rippled across the globe. Swiss Re, one of the largest reinsurers in the world, set aside billions to cover its share. Allianz, Travelers, Chubb, and others all took major hits. Wall Street analysts warned that the case exposed a dangerous weakness in the system: ambiguity in insurance contracts. Investors demanded tighter wording, and reinsurers began demanding stricter terms on every treaty they signed. Lloyd's of London, already recovering from years of asbestos-related losses, called 9/11 and its aftermath one of the most expensive single events in its history. Total global insured losses from September 11th, including not just the World Trade Center, but also the Pentagon, flight crashes, business interruption, and liability claims, reached nearly $40 billion. In 2001, that was the single most expensive insurance event ever recorded. Even today, adjusted for inflation, it remains among the top 5. For Larry Silverstein, this wasn't just about money. It was about survival and legacy. Critics accused him of exploiting tragedy for financial gain. Some accused him of trying to double dip, but his defenders pointed out that without the insurance money, rebuilding the site would have been impossible. Silverstein himself became a polarizing figure. In the media, he was often portrayed as either a savvy businessman fighting for his rights or a profiteer pushing for more than he deserved. What's undeniable is that he fought hard. He assembled teams of top-tier lawyers, experts, and consultants. He pushed the legal system to the limit, and while he didn't win the full $7 billion, his persistence secured enough to finance the rebuilding of Ground Zero. The broader insurance industry took the lesson to heart. After September 11th, insurers rewrote their contracts. Words like occurrence, event, act of terrorism, and catastrophe were defined with precision. No more vague binders, no more unfinished contracts. Reinsurers in Europe began requiring aggregation clauses, language that specifically described how multiple losses would be grouped together. Property policies in the US introduced terrorism exclusions, and liability insurers restructured their wording to avoid being trapped by ambiguity. The case also influenced how courts handled other disasters. In Hurricane Katrina, for example, insurers debated whether wind and flood damage counted as one occurrence or two. In earthquakes with multiple aftershocks, courts cited the World Trade Center case as precedent when deciding whether the damages should be grouped together. This wasn't just a fight about New York real estate. It became a reference point for insurance law worldwide. And then there was terrorism coverage itself. Before September 11th, it was included for free. After 9/11, no insurer wanted to touch it. The risk was too unpredictable. That created a crisis. Developers couldn't insure skyscrapers. Banks refused to finance projects without terrorism insurance. Cities faced the prospect of stalled construction and empty skylines. In response, Congress passed the Terrorism Risk Insurance Act in 2002. TRIA created a federal backstop, essentially saying if terrorism losses exceeded a certain threshold, the government would share the burden with insurers. It was controversial at first. Some critics called it a bailout for the insurance industry, but supporters argued it was essential for the economy. Without TRIA, insurance markets would collapse, and major cities would grind to a halt. TRIA was renewed several times and remains in place today, though modified. It has become one of the quiet pillars of U.S. economic stability, and it exists because of the lessons learned from the World Trade Center insurance battle. So what do we learn from all of this? The lesson is clear. Insurance isn't just about numbers. It isn't just about coverage limits or premiums. It's about words. The definition of one word, occurrence, determined whether Larry Silverstein got $3.5 billion or $7 billion. That one word fueled years of litigation, billions in payouts, and global changes to the insurance industry. For policyholders, the takeaway is sobering. Don't assume you know what your coverage means. Read the definitions, ask questions, because when disaster strikes, insurers will point to the fine print, and courts will enforce it. For insurers, the lesson was just as sharp. Never leave contracts unfinished. Never rely on vague binders, because ambiguity is a liability, one that can cost billions. And for the rest of us, this case is a reminder that the hidden machinery of insurance is just as important as the events we see on the news. Without insurance, economies stall. Without precise wording, chaos reigns. And without battles like this one, we wouldn't understand just how much hangs on a single word.